I think we can start. So first of all, I would like to apologize for the audience. We had some technical difficulties here. It seems that after Brazil unexpected loss, even the computer decided to not work today. But we are back in business. My name is Vinicius Matarazzo, and I'm corporate partner of Bichara Advogados. Thank you all for attending this webinar. Today, we will discuss a very hot topic, which is the presidential and midterm elections in Brazil and United States, and its impacts on tax legislation of both countries. To assist us with this discussion, we have the honor of having here three outstanding tax specialists. Firstly, to focus on the Brazilian perspective, I would like to introduce my tax partner, Murilo Arevato, whom we already may know. Murilo is partner of the tax consulting team of the firm. He has graduated and post-graduated in tax law from FGV Rio and holds an LLM in international tax law from the University of Vienna. Thank you, Murilo. To assist us with the US perspective, we have here Lawrence Hill and Eric Solomon, which are partners from Steptoe. Eric Solomon is still having some technical difficulties, so he will join later. I'm sure you all know Steptoe, but in case you just arrived on Earth, Steptoe is a law firm with its headquarters in Washington, D.C., which has more than 100 years of practice and has earned international reputation for represented clients before governmental agencies, litigation, arbitration, and business transaction. Larry is a long-time friend of ours and is co-head of Steptoe's tax controversy practice, has represented approximately 24 of the world's leading financial institutions, as well as multinational corporations, international accounting firms and law firms, private clients, CEOs, and members of the royal family. Thank you, Larry. When Eric joins, we will get the word to him, but I also would like to introduce him. Eric is one of the most foremost policy experts in the US. He's also partner of Steptoe's tax policy practice. He served as Assistant Secretary for Tax Policy at the US Treasury Department. He's a professor of law at Georgetown University Law Center, and he holds a JD from the University of Virginia Law School. He also holds an LLM from taxation from New York University. I would also like to open the space here. If anyone from the audience wants to participate in the discussion, please don't be shy and send us questions on the webinar chat, and we will reproduce it at the Q&A session at the end. After the proper introductions, I would like to initiate with a quick contextualization of the topics being discussed today, and then leave the floor to the experts. In Brazil, as all of you may know, we currently have a strongly pluralized political landscape. Our most recent elections had the smallest vote difference of Brazil's history. President Lula won with a less than 2% difference. However, on the other hand, most part of the Congress elected supports President Bolsonaro. Therefore, I foresee that President Lula will need a lot of negotiation with the Congress. Even though he has the power now, he will have to dialogue with the other party. In the US, we have a similar situation with President Biden winning the election in 2020 in a very, very polarized scenario. As you may know, a lot of people make comparisons between Bolsonaro and Trump. Let's not take political sides here, but that's something that's a fact. 2 years after being on charge, he has not necessarily delivered the expected results, and also is having to deal with a lot of controverted matters. The midterm elections results, at least for Brazilians, were a surprise, since the Democrats kept a relevant position in Congress. In any case, we believe that both political scenarios shall have significant impacts on tax legislation. Based on that, Murilo, would you like to start by explaining to us the Brazilian perspective?
Yes, thank you very much, Vinicius, for this very perfect introduction. And I think that the way you said that this presidential election took place here in Brazil will explain a lot what will come forward. The idea here is to be more specific on tax and to discuss what could come from a tax, because here in Brazil, as you know, we have a very tax complex system. And for a long time, we have been discussing this tax reform. And so I think that one of the most important subjects and most expected subject at the moment is to the tax issue. So what happened throughout the whole campaign? President Lula, our president-elect, he was defending the need of a tax reform, even though he was not very specific of which kind of reform he wanted to pass. But then, as he was elected, he started his transition team. And this transition team is composed of the former economy minister, Mr. Nelson Barbosa, who declared that he wanted to unify the VAT and create a single VAT system, somehow the way that it's being discussed in Congress. And this, in some ways, shows that the executive, even though they want to pass a tax reform, they don't want to clash with the Congress at the moment, because they want to adapt or probably work on the tax bills that are already here being discussed. And well, besides him, it was currently selected the Ministry of Finance of Brazil, Mr. Haddad, and he said that the tax reform would be, for this administration, a priority, something that they wanted to pass as soon as possible. And of course, that the swifter and the faster you discuss the tax reform, the better it is, because as you all know, the first months of government is known as the presidential honeymoon, where everything is easier to pass. The president is very strong. He feels very strong because he won the elections. So he tends to have a little bit more of strength and support of the population. Even though the legislation, he might have a little bit of difficulties of passing because of the bipartisanship in this case. But what Mr. Haddad, the way he's giving the importance to that can also be seen through the fact that he will appoint, and he already said that in some interviews, that he will appoint as his secretary of the Ministry of Finance, Bernard Api. Bernard Api is one of the persons, one of the people who was in charge of the first bill of the tax reform. And he is an economist who defends a lot the tax reform. But the question we make, why is a tax reform right now such a priority? I mean, of course, our tax system is very complex. The idea of dividing the taxes between state and municipality based on goods and service is something very that is not applicable anymore, especially because of the huge intangibles we have. We have softwares, we have means of payment. You don't have that dichotomy between goods and service today. So it's something that's already in the past. Of course, it is very complex, our ancillary obligations, when we think that we have a federal state level, a state level, a municipal level. But that's something we had for the past, probably for a long time. We have already this system. So the question is, what's more? Well, the fact is that we are facing a moment of a huge fiscal deficit, because we had a high increase in social benefits. These social benefits, they were already created during this administration, and they tend to be maintained through the next administration. And this social benefits, of course, they cause an expense of approximately 50 billion reais, something like about $10 billion every year. And there's no source for that benefits unless there is an increase of the public debt or an increase in taxation. So what we fear is not only tax reform that is needed, that can make the tax system simpler, but a tax increase. And if the tax reform is being used as a way to increase the taxation. So I think that's the biggest hurdle here that we have to explore. So after this, a little bit the political context of this tax discussion, tax legislative discussions, I think it's important to explore very briefly, even if it's very briefly, what is in hand today, what's being discussed in Congress today. Well, and just before we move to that, we have to take into consideration that we have a legislative problem, a legislative problem in the level of the states, because the states are complaining that because of federal measures, they had a decrease in revenues. And one of the examples of the one of major impact was the decrease in the VAT, state VAT on fuels that was reduced due to the high inflation. When the VAT on fuels was reduced, then we had a very high decrease in the revenues of the state, because fuels represent around 30% of the earnings with VAT in the state. Let me just give a quick stop to introduce once again Eric Solomon, who is also joining us today, and we'll be discussing the tax. What are the tax problems and discussions for the next coming years in the U.S. I was telling them, Eric, about this necessity of reform of the Brazilian tax system, and at the same time, because of the complexity, the reform of the tax system, but at the same time, we have a need of generating tax revenues so that we can cope with the public spendings, especially due to the social benefits and to some reductions that were made in order to reduce inflation, such as the taxation of fuels. So right now, we have what we have in the legislative. It's a bill to reduce our current VAT systems. We have today a state VAT and a municipal VAT. Well, they have their own legislations and their own rates, into only one VAT, a single VAT, which will be composed of two rates, a municipal rate and a state rate, but they would have to be uniform for all goods and services. So the municipalities and the states, then they can establish the rate, but they cannot change them despite of the necessity or the importance of what is being commercialized for the population. So that and the same rules and ancillary rules, they would be applicable. Somehow there could be tax benefits, but the tax benefits would have to be applicable throughout all the federation, all the states and municipalities. They would have to apply the same tax benefits that they would have to be created by a complementary law that is applicable in all segments. So the idea would be also of them to be absolutely non-cumulative, so that they would not bring any problem with what's today. We have a lot of discussions of what inputs are generate credits or not. In this case, they will be absolutely non-cumulative, and the rate would be around 25%. That's what is foreseen in order to keep the current revenue, not a tax increase, but to keep the current revenue. And in the federal level, we would have also a VAT that would be also absolutely non-cumulative and would be levied at a 12% rate. The problem here is, and when we think about what would be the problem of passing this bill, is that there are several segments that are very affected with that. For example, the service sector, they today are taxed at a 5% rate, and they will start to be taxed at a 25% rate. Even though it's a non-cumulative tax, you would have this segment, the service segment, that is the one that employs more in Brazil, around of 90% of the employments, they are for service sectors. They don't have almost no credit because the payroll gives no credit, and that's the number one expense for them. They don't have, as an industrial segment, a lot of inputs for order of credit. And then API, that is this economist, he says, well, but the thing is that this will be neutral because the tax will be completely transferred to the final consumer. But yes, that's right. But of course, not that every service will have the elasticity so that the producer, the provider, would be able to transfer the whole tax to the final consumer. Of course, sometimes he will have to bear this burden so that he can keep his competitiveness. So this is a thing that is of major concern. And of course, the inflationary impacts. When you have a 25% increase in taxation, you can have this inflationary impact. So I think that this is a point that can be subject to a lot of criticism and could probably lead to some changes in the reform. Even though we do understand that the tax reform will be passing, it will be approved at some time, we believe that some tax or something must be created in order to ease the taxation of some segments, so there's an enough consensus, because it's very hard to do it otherwise. And in second place, we think about the income taxation reform. And that one is a little bit more polemic. It is a little bit more controversial because it was approved in Congress, the House of Representatives. That is very interesting. But when it reached the Senate, the major senator, the senator in charge, the reporter, he said that this would be the last, that would be, it would stay in his docket forever while he was still in Senate, and he was reconducted. He will be in Senate for some more years. So it's something that there is not enough consensus yet. But what is predicted, what the bill foresees, is that you would have a 15% dividend taxation, and our current 34% income tax rate will be reduced to 26. So we would have a total 37.1 taxation. And what is interesting on that is that the current finance minister that he will be leaving next year, he said, well, the taxation of dividends will be fundamental, essential, so that we can keep the social benefits. But the expected revenue on tax on dividends is 30 billion, while we have an expected expense with social benefits of 50 billion. So even that would not be enough. So that's something we should take into consideration. I think the taxation of dividends, it has a very social support, because the way of taxing the shareholders, the capitalists, the holders of the means of production. So it has a very strong appeal, but it will be a little bit harder to pass, even though that's something the president has always dreamed of. The new president has always dreamed of and pretends to stand. And the last thing would be, and I think that's very that's already in place in the US for a long time, that is the taxation on income, personal income, that is in brackets. We have our brackets, they end in 27%. He wants to increase it to 35%. So that that's something he said, even a project he has, even in 2002, while he was president for the first time. But the thing is that, just to summarize, we do believe that an income tax reform will be coming, because there's already enough consensus. Everybody believes that the tax reform is important, and all. This is the first time that we have finance minister who is already having a secretary, someone who was involved in the creation of the bill of the tax reform. So that's something we might expect, even though it will probably suffer a lot of amendments.
Wonderful, Murilo. Thanks a lot for the detailed explanation. Once again, ask whoever has some questions, please send us questions in the chat, and then we address at the end of the speech. So now we kind of ask Lawrence and Eric, please, if you can, share with us the U.S. perspective on that.
Sure. Excuse me. Good morning. I'm Eric Solomon. First, how much time do I have? I apologize for the difference in time zones that caused some confusion at our end. So how much time would you like me to speak for?
You have 15, 20 minutes, so we can still leave some moments for questions.
Okay, very good. In order to understand what's going on in the United States, there are really two things you need to understand. First is the structure of the U.S. federal government and how it works and how tax legislation gets enacted. And second, what you have to focus on is the current partisanship between, or lack of bipartisanship on the part of our two political parties, Democrats and Republicans. And those are two very important factors in in the future of tax legislation in the United States. So the structure of the U.S. federal government, as well as the lack of cooperation between Democrats and Republicans. Now, I'm just going to talk about the U.S. federal government. I'm not going to talk about the 50 states. We have a federal system, so we have a parallel system of both the federal government and state governments. Each of the state governments passes its own laws, but we're not going to focus on that today. And each of the states have their own tax laws, and we're not going to focus on those today. As you know, we have a president, we have a Congress that has two parts, and we have our federal courts. We have a three-part system by our Constitution, both the president, the legislative body, and the courts. The president's elected every 4 years, and the next presidential election will be in 2024, and electioneering has already started. It's probably, President Biden is probably going to run again in 2024, and we expect former President Trump, as well as various other Republicans, to run for president in 2024. As I said, Congress has two parts, and tax legislation has to be passed by both parts, both the House of Representatives and the Senate, and has to be signed by the president. The House is a representative body with 435 members allocated by population across the country. The Senate has 100 members, 2 from each state. So the composition of these bodies and which party controls them is very important for tax legislation. All House members are up for re-election every 2 years. So from 2020 to 2022, the Democrats had a small majority in the House of Representatives. But now, after the November 2022 election, the Republicans will have a tiny majority, and that will start in January of 2023. And the fact that the Republicans now have a tiny majority in the House of Representatives is very important. In fact, it's critical for tax legislation, especially because Democrats and Republicans have difficulty negotiating and compromising. 1/3 of the senators are up for re-election every 2 years. A term for a senator is 6 years, and so 1/3 of them are up every 2 years. And the Democrats controlled the Senate from 2020 to 2022. And somewhat surprisingly, after the November 2022 election, the Democrats continue to control the Senate. In fact, they control the Senate even a little more than they did before. They now have a margin of 51 to 49. But the main point is that from 2020 to 2022, the Democrats controlled the White House, the House, and the Senate. So the Democrats controlled all three parts of the legislative process. And this enabled the Democrats, despite some internal party difficulties caused by two particular senators, Senators Manchin and Sinema. Nevertheless, Democrats were able to push through tax legislation, and it's called the Inflation Reduction Act. And President Biden signed it in August of 2022. Now, as I said, Congress is is very partisan. So the Democrats had to push through that tax legislation on their own. And because the Democrats only have a small majority in the Senate, they had to use a special procedure called reconciliation, because the Republicans were unanimously opposed to the legislation. So the Biden administration in August of 2022 passed important tax legislation, all Democratic, using this process called reconciliation. And this partisanship has had a critical effect on tax legislation, except where there is agreement of the parties on certain issues. For example, retirement issues, Democrats and Republicans agree with each other. But generally, because there's so much partisanship, one party has to have control of the White House, the Senate, and the House of Representatives to enact tax legislation. And the parties in Congress are so evenly divided in numbers that, as I said, you need to use this special process called the reconciliation process. And that's what the Democrats used in 2022. Now, the fact that the Republicans have taken control of the House of Representatives is a critical fact, because the Democrats now will not be able to push through their agenda because the Republicans control the House, and the Republicans generally aren't going to vote for the Democratic agenda. So now that we have split government for the next 2 years, we're not likely to see any significant tax legislation. As I said, the next election is in 2024, so who knows who's going to control the presidency and the houses of Congress. Now, what is the Democratic agenda? Well, stated very briefly, the Democratic agenda is assistance to lower income individuals and higher taxes on wealthy individuals and on corporations. That's what the Democrats are about. But as I said, now that we have split government, even using reconciliation procedures, the Democrats will not be able to push through their legislation for the next 2 years because the Republicans control the House of Representatives. Now, in the next 2 years, if the Democrats do want to try to enact any tax legislation, they'll need to negotiate with the House Republicans to get the support of at least some House Republicans, which is unlikely unless the Democrats offer big concessions to the Republicans. So the Republicans now have a blocker, and the blocker is that they control the House of Representatives, and that will generally prevent tax legislation being pushed by the Democrats in the next 2 years. So the bottom line is that we're unlikely to see significant tax legislation in the United States, at least for the next 2 years. Now, but what is going to happen in 2025 is going to be a big event. We are going to have big tax legislation in the United States in 2025 because Congress in 2017, under the Republican Trump administration, enacted, again, using those special reconciliation procedures, the Republicans at that time controlled the House, the Senate, and the presidency. And so the Republicans in 2017 enacted the Tax Cut and Jobs Act. And many parts of it expire for arcane reasons I won't get into, but many parts of the Tax Cut and Jobs Act expire in 2025, and particularly the parts that affect individuals. So in 2025, there's going to have to be big tax legislation in the United States, because important parts of the 2017 Tax Cut and Jobs Act will expire. So that's the next big tax legislation in the United States. Now in 2025, who knows who's going to be president? Who knows who's going to control the Senate? Who knows who's going to control the House of Representatives? We don't know, but we do know that there's going to have to be important tax legislation in 2025. But now until then, because we have split government, because the Republicans control the House of Representatives, we don't expect there to be significant tax legislation. Now, at this moment, between the November election that just occurred and the beginning of January, we have something called the lame duck session. And what's a lame duck? Well, a lame duck is exactly as it sounds like. We have a Congress that is concluding, the 117th Congress is concluding. And so for the next 2 months, the current Congress will stay in place, but the new Congress will start in January. So the question is, in these last 2 months of this Congress, will there be tax legislation? That's the question. Now, Democrats and Republicans are talking to each other right now about the possibility of some year-end tax legislation. Now, you would say, well, why can't the Democrats just use that special procedure, since until January they control the presidency, the House, and the Senate? Why can't the Democrats use the special procedures they used for the Inflation Reduction Act to pass legislation by the end of December? Well, the answer is reconciliation is not available at the present time. So Democrats are going to have to negotiate with Republicans now between now and the end of the year. So this special procedure called reconciliation is not available. And therefore, for other reasons I won't get into, Democrats are going to have to negotiate with Republicans if there's going to be any tax legislation in the United States between now and December 31st. Well, they are talking to each other. They don't have much time because only a few legislative days left before the end of the calendar year. And so who knows whether anything is going to happen. My view is it's possible, but right now the parties are far apart. The Democrats, again, consistent with their values, want to increase assistance to lower income individuals. And they want to pass a bill before the end of the year that expands the child tax credit, which is a credit for families with children. Basically, it is a refundable credit that makes payment to families with children. And the Democrats, between now and the end of December, want to pass a bill that expands the child tax credit. On the other hand, the Republicans want to enact some business-friendly provisions and certain provisions that will help businesses. But they argue they don't want to support the expanding the child tax credit because they think it's too expensive. Now, I'll just want to pause and give a footnote right here. Sometimes in the United States, we care about deficits. For a while, a number of years ago, we cared about deficits. While interest rates have been low in the United States, deficits have not been as big a concern because government has to pay less interest payments when the interest rates are low. Well, now interest rates are starting to go up. So we might expect to hear more about our budget deficits and our huge debt in the United States. And that's a very important issue that I'm sure is going to come back in the coming years about the United States deficit and the huge interest payments the United States government needs to make, which crowds out other investments in human capital. But in any event, the Republicans are arguing that to expand the child tax credit is too expensive. So they're opposing that. And the Democrats say, well, we're not going to agree to any business-friendly provisions unless you Republicans agree to an expansion of the child tax credit. So the two parties right now are talking to each other, but who knows in the next 2 weeks whether some deal will be struck. I'm not optimistic about it, but we'll just have to wait and see. In addition, there are various provisions in our Internal Revenue Code that expire annually. And the reason we have expiring provisions in our Internal Revenue Code is for the same reason I mentioned before. Because whenever you enact tax legislation that has benefits, it costs money. And Congress at times is concerned about spending too much money and putting up too much debt on the United States balance sheet. So Congress passes various provisions that expire. So in addition to the issues about child tax credit and the business tax provisions that are being negotiated, there are also items that expire at the end of the year. So all those things are in play in the next 2 weeks in Congress. Whether something's going to happen, I can't tell you. If it doesn't happen, it'll just carry over to the new Congress. And as I said, the new Congress will be split because the Republicans will control the House and the Democrats will control the Senate. So what's going to happen in the next 2 years? Well, in the next 2 years, the real focus, I would say, in the United States at the federal level is not going to be on tax legislation. The tension will be building towards 2025 when parts of the 2017 Act are going to expire, but that's probably going to wait until the end of 2024 or into 2025 when Congress will have to deal with that cliff when those provisions of the 2017 Act expire in 2025. So what's going to happen in the United States is that Congress isn't going to do a whole lot in the tax area, but the Biden administration on its own, what we call the executive branch of our government, as opposed to the legislative branch, which is Congress, the executive branch, the Biden administration is going to do everything it can to push its agenda forward in the next 2 years. And it's going to try to do that through rulemaking. So these are not laws passed by Congress. These are rules that are called, or regulations that are put out by the executive branch of the U.S. government. So by the U.S. Treasury Department, and the Internal Revenue Service in the tax area. So in other words, Congress enacts the laws, but the executive branch, which includes the Treasury Department, and the Treasury Department includes the IRS, the executive branch under the president writes the regulations and rules to interpret the laws that Congress enacts. And so the federal agencies, while Congress probably won't be legislating new laws, the federal agencies, including the Treasury Department, are going to be spending the next 2 years writing regulations and other rules interpreting the laws that Congress has enacted. And of course, the Biden administration will be selective in what it does. The Biden administration will write regulations and other rules in areas of importance to the Biden administration. For example, in the energy space, because Congress in the Inflation Reduction Act this past summer enacted new energy tax provisions. And so the Biden administration is going to be writing regulations and rules to carry out that very important priority of the Biden administration, which is to move to address climate change and to move away from fossil fuels. So starting now, the Biden administration, if it can't get Congress to do things, it's going to do it itself, and it's going to interpret the rules that Congress has enacted to push the priorities of the Biden administration. Now, of course, in some situations, the Republicans will say, wait a minute, those regulations and rules, Biden administration, that you are writing are not consistent with what Congress wrote, and they're invalid because they misconstrue the laws that Congress enacted. So that's going to be the tension in the next 2 years. Without new tax legislation, the Biden administration, through the executive branch, through the agencies, through the Treasury Department and the IRS, will be writing tax regulations to carry out the priorities of the Biden administration. And they will do so interpreting the laws that Congress has passed. And the Democrats will write rules that generally are consistent as possible, to the extent possible, that are consistent with what the laws that Congress wrote. And of course, the Republicans will push back and say, oh, Democrats, those rules that the administration are writing are not consistent with what actually Congress wrote. And so we're going to see this go into the courts. The Biden administration will write rules that interpret the laws that Congress has enacted. The Republicans will argue that the Democrats are stretching the rules, and private parties are going to bring litigation in the courts, arguing that some of the rules and regulations that the Treasury Department and IRS are writing are beyond the scope of the laws that Congress enacted. Because what Congress enacted, the Republicans will say, is the law. And the Democrats can only write rules that are consistent with what Congress, the statutes that Congress wrote. So that's going to be the action in the next 2 years. Not a whole lot of federal tax legislation. The Biden administration writing a lot of rules and regulations to try to carry out the priorities of the Biden administration. So that's where it's going to be. Now, one other thing I just want to mention before closing is that in the Inflation Reduction Act in August of this past summer, the Congress enacted a part of the bill was to give the IRS $80 billion over the next 2 years. That's about $8 billion a year, extra money. The IRS budget is generally about $12 billion a year. So as you can see, this is a huge increase in IRS resources. The IRS is having many, many challenges. The IRS really has 3 focuses of its activity. First of all, enforcement of the tax laws. Second, providing services to taxpayers. And third, related to both of those, is technology, computerization. And the IRS is not doing well in any of these things. So Congress passed, as part of the Inflation Reduction Act, a provision giving the IRS an additional $80 billion over 10 years. So we're going to be seeing in the next few years, it's going to take a while, the IRS ramping up the use of these resources to try to fix some of the problems it's had in services and enforcement over the last few years. At the same time, the Republicans are going to try to prevent the IRS from actually getting the $80 billion, because it's been a traditional IRS platform that the IRS is really, let's just say in the United States, generally there's an aversion to the Internal Revenue Service, and it is reflected in our politics. So the Republicans are going to try to take that money away that has been enacted for the IRS to try to improve its operations. I'm not going to talk about what's going on at the OECD. I'll just spend 1 minute to say, as you know, the United States has been very much involved in the negotiations in the OECD, both for Pillar 1, which is dealing with taxation of participation in market countries, as well as Pillar 2, which is a minimum tax. At the present time, the United States, in terms of legislation, is not likely to do anything. And right now, we are somewhat at a pause in the worldwide negotiations about Pillar 1 and Pillar 2. And we'll have to see where that goes. But at the present time, I don't expect the United States Congress, which is going to have to change its treaties in order to execute some of the goals of the OECD. I don't expect the United States to be doing anything on the legislative front in that regard. So with that, I'll stop, and I'll thank you, and then I'll turn it over to questions.
Thank you. Thanks a lot, Eric. It was very interesting. I think it already raised some questions from the audience. I think Murilo has one question. Murilo, you are on the floor.
Well, actually, I would say it's very hard to have a question after such a comprehensive explanation about the future and present situation of the U.S. from a legislative and tax perspective. But there's one point that really caused me some thinking, especially due to the fact that I somehow made this parallel to Brazil, because here in Brazil we also have the legislative power. You were talking about the executive ruling specifying the federal law, and here we have also the same thing. I mean, we have the legislative, who has the power to enact laws, and then you have the executive. Then they can regulate the law, but they cannot innovate anyhow in what's in the law, due to the fact that the law is theoretically came from the public opinion and through the direct elections.
Exactly the same issue. We have exactly the same issue in the United States. And the question is for us, how far does the executive branch push its authority?
Yeah, exactly. But here in Brazil, probably in the US isn't the same, but here in Brazil, the people who question more the powers of the executive, and that's how we are such a litigation country, is the taxpayers. Every time that we see that the executive is pushing a little bit harder in order to raise revenues, then we litigate. And there is the same with more legislative clash.
Exactly. In the United States, you're absolutely right. We have the same tension in the United States. In fact, in the United States, the courts, private parties are bringing lawsuits and into the courts, and the courts are becoming increasingly conservative on this point and pushing back hard on the extent of the authority of the executive branch. And I expect, as we move forward in the next few years, to see our Supreme Court say to the federal agencies, to say to the executive, in many cases, that the federal executive has exceeded its authority in pushing its agenda, because Congress passes the laws, and the federal agencies, the executive branch, is pushing too far and not executing what Congress said. And so I expect this to be this is an increasing issue in the United States, and I expect the courts to be pushing back hard on the federal agencies saying, look, Congress told you what the law is, and you are interpreting it too expansively to push your agenda. Absolutely right, absolutely the same. And in the United States, we are seeing the courts telling the executive branch to back off.
Perfect, perfect.
So I think I would like to take a moment once again to thank you all for participating in our webinar. Please, I speak in the name of the group when I say that you please feel free to contact Bicharas and Steptoe's partners here in this call in case you have any doubt of what was discussed here today. And we look forward to see you in a future next time in a webinar. Thanks a lot. Thank you, Laurie. Thank you, Eric. Thank you, Murilo.
Thank you.
Bye-bye.